Mahesh Patil is now with us. He's CIO, Aditya Birla, Sun Life Asset Management Company, with what he's making of things. Mahesh, thank you very much for your time. Good to have you here. Let's just, before we get to markets, let's just address the one situation, which is with regards to Indocent. As a fund manager, Mahesh, what's your sense? How do you think about this, basically? I'm not asking for a view on Indocent per se, but do you think after what it has gone through, someone credible at the top will be able to quickly, correct things and get the bank back on growth trajectory as many are hoping to, or this is now going to be more prolonged? Just your thinking on a situation like this.
Yeah, good morning, Prashant. So I think in the banks, I think the most important thing is the two important things. One is on the asset quality side, okay, which is of paramount important, and second is in terms of the solvency. So if you look at it in a bank, okay, it could have some issues on the asset quality side. It could be temporary, it could be cyclical in nature. And as long as the bank's balance sheet is decent enough, the capital adequacy ratio, in spite of taking the losses, okay, which needs to be taken, is good enough. I think there is, obviously the stock would react, okay, to this thing, but finally, I think there is no really run on the deposits. I mean, that's another important thing, okay, which needs to be looked at. Retail depositors, what is the confidence? As long as the overall capital adequacy is still fine after taking over the losses, and the deposit side, okay, they're able to hold on depositors. I think if there is a change in management and leadership, okay, that becomes again for investors to look at it at afresh and see what the new leadership has in store in terms of taking the bank, okay, to the next level. What are their plans in terms of stabilizing, first in terms of the asset quality issues, but also more in terms of the growth path, which are the areas they would try to look at, and what will drive the ROAs of the bank to a reasonable level. I think these are the factors, I think, which one would look at, especially whenever a bank or any of the financial services company goes through a kind of a crisis situation.
Absolutely, and let's see what finally comes out of it and how quickly they can get the house back in order. Mahesh, morning, great to have you on the show. So I want to talk to you about the one sector, actually the only sector that's managed to stand out in the last 2 odd weeks, and that's defense. And therefore also, I mean, even I was looking at the tally for this week. Actually, defense is the only sector, the Nifty Defense Index is the only one that's up about 1 to 2%. Otherwise, the market's not finding too many legs to run on. Is that a concern on the overall scheme of things? I mean, the fact that this up move beyond 24,000 is becoming narrower and narrower. And beyond defense itself, what would your advice be, given the way the stocks have already run up now? Is it, is it becoming a little too hot to handle, perhaps?
Yeah, so if you look at the defense sector, a year back, okay, or prior to that, we saw a huge amount of rally in the sector in anticipation of, good order inflow coming into the sector, and there was a focus on the government in terms of sourcing more from domestically, which led to the initial leg of rally, and the stocks really went very high, valuation zone, and then we've seen a correction in the last 9 months. Since June, July, we've seen a correction in defense stocks and also PSU stocks in general. And post that, I think we've seen, again, if you look at PSU as a basket, right, because most of the defense stocks are in the PSU basket. PSUs are also started to now kind of do well. In some of the cases, the valuations were looking good. But defense in particular has seen a new lease of life, again, coming back on the recent conflict, what we saw between India and Pakistan, but also kind of realizing that India needs to secure its defense resources, okay, and looking at the geopolitical risk. There is a feeling that allocation to defense, okay, which has been kind of over a period of time, we see as a percentage of GDP, it is still fairly low. That could potentially see an increase in the subsequent budgets. But near term, I think clearly there is emergency procurement, okay, which is likely to be there, which can mean that you could see order inflows for a few companies, which could buoy them up. So I think.
But are the valuations, I mean, we understand that there's perhaps still significant ordering potential, but the valuations, Mahesh, what do you think of that?
So I think valuations, again, have been the same, but as long as, again, it boils down to each company in terms of the order pipeline. If I think sometimes we see in defense that it can be lumpy. So I think going back only from a short-term perspective in terms of the emergency procurement, I think that could be a misleading. But companies structurally which have got a long runway and have got larger projects or strategic projects, okay, which can see continuous investments. I think in those companies, I think the multiples could probably be better than what it was in the last, say, 1 year or so, because the visibility there is now better. But I would say that stock specific, I think it has to be looked into it. And while when there is a broad macro theme, everything moves up. But I think there is a credible story, I think, which is there from a at least from a ordering side and a more long-term sustainability in the sector.
Okay, all right. Hi, Mahesh. Good morning. Good to see you in. What about the entire renewable energy space? How interested are you out there? You know, because there's plenty of uncertainty. It was a fancied sector just around 18 to 24 months ago. And now suddenly some of these stocks, they seem to be out of favor. And you have some unfavorable news every now and then. Vare, for example, overnight what's happened with regard to the passing of the bill in the United States. That one's pulled back, though the numbers and the outlook that the company is giving is very, very strong. So from this pack, what do you like?
So the renewable space, one is the utilities or the power producers. I think those are the companies where their valuations had moved up early. I think we have seen a correction over there. I think that's the space which looks now more reasonable in that sense. The equipment guys, the suppliers, whether it is the suppliers of the panels or the cells, they have seen a large improvement in the order book, but more importantly in the margins because of the, mainly the export orders and some amount of demand supply mismatch which was there. I think our concern there has been that while the near-term outlook is good, profitability is very, very strong, there's a lot of capacity which is coming up in this sector, right? Because of whenever you see large margins and good order, you see more players coming up. So in the next couple of years, you could see more capacity coming in this space. And also some of the tariff barriers, okay, which have been put on China in the US is providing this opportunity to make supernormal profits. We think that could be at risk. So I think in these sectors, especially the equipment guys, we are a bit worried because there could be pressure on margins, okay, because these high margins and these high ROC seem to be unsustainable at this point in time.
Okay, so some caution there perhaps on some of the renewable energy stocks. Got that, Mahesh. Thank you very much. Good conversation as always. You have a good rest of the day and we look forward to connecting again soon. Thank you very much. Well, that's a view from Aditya Birla Sun Life AMC. Markets actually doing quite well, cruising along right now. 100 points higher. Nifty is up about 0.5%. Mid-cap index also up about 0.3%. So it's turning out to be a good Friday.